Central bank digital currencies are digital chains. Imagine a world where every dollar you spend is watched. Not just watched, but judged. Where money isn't yours once it's in your account, it's permissioned, conditional, programmable. And if you step out of line, even just a little, your digital wallet could go dark. No food, no fuel, no flight, no freedom. This isn't science fiction. This is what central bank digital currencies, CBDCs, make possible. They call it innovation. We call it digital chains. Let me tell you a story. In 2020, the pandemic gave governments an excuse to flex power they'd never used before. Lockdowns, mandatory tracking, vaccine passports. The world got a taste of programmable society, and they liked it. Not the people, but the ones pulling the strings. Then came the next step: control the money. If data is power and money is control, what happens when the two merge? Enter CBDCs, digital currencies issued by central banks that look like money, but act like surveillance tools. The IMF, the World Bank, and over 100 governments are already testing them. China is leading the way with its digital yuan. You can't buy certain books, can't travel too far from your city, can't spend too much on games. The system blocks you instantly. It's programmable money with rules that change by decree. And the West isn't far behind. The US Federal Reserve is experimenting. The EU is pushing hard. Canada too. They're not asking us. They're telling us and wrapping it in words like safety, inclusion, efficiency. But what they're building is a cage. Imagine being locked out of your funds because of a bad social credit score, or denied travel because your carbon footprint is too high. Sounds far-fetched? That's already happening in China, right now. And the infrastructure is coming to you next. Let's go deeper, because it gets worse. CBDCs give central banks the ability to set expiry dates on your money, control where you spend it, or freeze it entirely. No judge, no jury, no appeal. They call it programmable payments. We call it conditional existence. Freedom used to be cash. Now, freedom might be disappearing, bit by digital bit. This isn't about left or right. It's about control versus choice. And here's the twist no one talks about. CBDCs aren't money, they're tokens. Tokens the state can revoke or restrict at will. Imagine your paycheck arrives, but it expires in 30 days. You're forced to spend it, can't save it, can't stack wealth. Now imagine prices keep rising, and your wallet can only buy government-approved essentials. Is that freedom, or is that rationing disguised as innovation? And all of this, every single transaction, is logged forever. The state sees what you buy, when you buy, who you buy from, and then decides what you're allowed to do next. This is a world where financial autonomy dies, and financial obedience becomes survival. So ask yourself, what's money without freedom? What's progress if it puts chains around our choices? CBDCs are a Trojan horse, wrapped in the flag of innovation, but carrying the code of control. Once they're rolled out, the old system disappears, cash dies, bank accounts morph, and opt-out is no longer an option. And here's the final nail. Once CBDCs are the norm, resistance becomes rebellion. So, how do we protect ourselves? It starts with awareness, and then action. We need decentralized money, uncensorable, unstoppable, borderless, voluntary. We need Bitcoin, because Bitcoin doesn't ask permission. It isn't programmable to serve politicians. It serves the people who run the nodes. CBDCs are built on surveillance. Bitcoin is built on freedom. So the question isn't whether CBDCs are coming, The question is, will you be ready when they arrive? Because when they flip the switch, you won't get a warning. You'll just wake up and realize you're already in chains. Break free. Learn, think, exit the system before it exits you. Like this video, subscribe, and share it with someone you care about. The only way to stop the digital chains is to break the silence.